Oil Daily Forecast, December 22nd, FXEmpire.com. The light sweet crude market you see in front of you on the daily chart uh, rose again. It continued to push the bullish momentum to the upside during the Wednesday session. The chart it does show that we overtook the 97.50 level, which was a minor support and resistance area, but it was an achievement nonetheless. Also brought to our attention is the potential that we have a downward channel. And on top of that, we have the potential of a bullish flag. Currently, we have to decide which one of the two is most likely to be true. Presently, we believe that the down channel is probably the more believable of the two scenarios, as the $100 mark is just above, and it would be a good place to see sellers step in. However, if the $100 mark gives way, this would actually confirm the flag, which by its measurement has us going as high as about 132. This would be a long-term move, obviously. We're not calling for $30 on Thursday, but it does show that there is explosive potential to the upside in the oil markets. Again, though, presently we are treating this more as a downtrend channel and less a flag. But if the channel gets broken, we do need to recognize that there may be a longer term opportunity set up, and this is why we bring this to your attention. We are ready to sell on signs of exhaustion at 100. If 100 gets blown through, and especially if we make a new high up around 104 or so, we'd be very keen to go long the CL contract and probably hold on for several months. The Brent markets are in a completely different scenario, as they're more range bound recently. However, we had a complex head and shoulders break down, and while it looked like a very valid signal, nothing's 100%, and we did have something happen on Wednesday that would cause concern for anybody short. The breakdown level, which for simplicity's sake we'll call 105, but it's really about 105 to 106, has been shot through, and we've actually formed a hammer in this area. So what's the likely scenario going forward? We have two signals, one that sells, one that buys. If we get a breakdown of the hammer through the bottom, that's a bearish signal, as it shows the rally has been completely wiped out and the bears are back in control. If that's the case, we're willing to sell. However, it does look like the bulls are going to take the upper hand again and perhaps try to run back up to the top of this consolidation area at 112.50. A break of the Wednesday highs has us thinking that that is the next attempt and the next move, knowing that 110, of course, will create a reaction as well. But it does give us a little bit of room to scout for a dollar or two. Till the end of the year, we think that there won't be any explosive moves in this market, and it's more likely just to kind of grind sideways in general, perhaps in this little box. Being the case, we're willing to sell at the top and buy at the bottom until it simply doesn't work anymore.